Happy Friday, Brian Manning here with your weekly update, and it's Jobs Week. Big report again today, but before we get to that, let's talk about what took place earlier in the week. So Monday was a pretty mixed bag of news. Nothing really happening in the marketplace. Did get some feedback on PCE, which is the Personal Consumption Expenditure, relatively unchanged and didn't really do much to the financial markets. Tuesday, markets are still kind of at unchanged levels. Did get some housing data on Tuesday. Got a CoreLogic's report. And CoreLogic's analysis year over year says the national appreciation is at 6.5%. So again, more really solid housing data and really good to see. CoreLogic's forecast for the next 12 months is national housing appreciation at 4.5%. So still really solid. And the CEO of CoreLogic is very bullish on housing and continues to see decent appreciation on a national housing level for quite a while, which is great. Wednesday this week, first round of employment reports, ADP. First Wednesday of every month gives us data on what happened with jobs being created in the prior month. So Wednesday we got data on what happened in July. ADP reported 185,000 new jobs created, non-farm payroll in the month of July. Pretty close to expectations. Analysts were expecting 210,000 new jobs from ADP, so not really much of a market mover there. Thursday, and as we do on the Thursday of every week, we get initial jobless claims, and so that's new people filing for unemployment benefits in the prior week. And so this Thursday, we got 270,000 people that filed for unemployment claims last week. Pretty much in line and been under this 300,000 mark for quite a while now, so that's kind of in line with what the Fed is looking for. And then the results are in today. Certainly the results were just dead on in today's jobs reports for exactly what the analysts were looking for. So BLS is the Bureau of Labor Statistics. They provide us employment information on the government side first Friday of every month. So we get today's report, which is data for the month of July, and analysts were expecting the BLS to tell us that we had 215,000 new jobs created in the month of July, and our report was 215,000 new jobs created, and then they revised their previous months and added 14,000 new jobs to the prior month. So overall, it's a pretty good report, and just exactly in line with expectations. Also got some unemployment data, and analysts were expecting unemployment to be at 5.3%. Month of July, unemployment came back at 5.3%. So I think this is the first time since I've been doing these videos that I've seen the analyst expectations and the results of the report just line up exactly on every single one. So pretty interesting. Fed meeting coming up September 17th. We have one more round of information to come out in regards to the economy prior to the Fed's meeting on the 17th. And unless the data we get over the next month of August and into the beginning of September is just really big stinker reports, then it's probably pretty likely we're going to start seeing a Fed rate hike coming into the September 17th meeting. And we've been talking about this. It's really not the end of the world for us on the mortgage side. So inflation is the enemy of interest rates, and the Fed raising rates will actually be done to head off inflation. So if that does happen, typically what's going to follow suit is that bond yields will go down, the cost of bonds will go up, and as a result, mortgage interest rates will go down. So it's certainly not the end of the world, and the bond markets are kind of eager and waiting for this to happen because there could be some benefits for us there. I will be around all weekend. If you have any questions, please give me a call anytime. If you have any buyers that need to get pre-approved, I would certainly love to help you and be part of your business. Have a great day.